Hello, good evening to you. Welcome to Business Focus here on TV3. My name is Alfred Okansi. We're live as well on DSTV channel 279 all across the world, on TV3 Ghana, on Facebook, on 3news.com all across the world as well. Now, this evening, we continue with the discussions ahead of the mid-year budget review. One of the major issues that the mid-year budget review seeks to address is generating revenue internally. As to how we do that is what we've been discussing over the period. A few suggestions have come up. We'll interrogate them as we go ahead as well. And also the Association of Ghana Industries has also waded into the falling value of the cedi as against some major trading currencies. It's still not looking too good. We'll be finding out exactly what their issues are. Also with the Institute of Statistical and Economic Research is also coming out with the analysis on that. We'll get into that. The Industrial and Commercial Workers Union have also expressed the expectations ahead of the mid-year budget review. We'll get into that. Plus, what is happening with the Ghana Investment Promotion Center, GIPC, as to whether they're on the track to hit the target of $10 million for this particular year in terms of foreign direct investment. We'll get into that tonight here on Business Focus. We'll go for the summaries of the news that made headlines throughout the week. So there's a lot more business news stories on 3news.com as well. Now, let's just, before getting to the discussion, remind ourselves of the fiscal targets as captured in the 2018 budget that was presented by the Finance Minister last year, and which is going to be reviewed. Some of the targets are going to be reviewed, all of the things being equal for the next half of the year. Let's take a look at the reminders. Bank of Ghana, that's the policy rate of 17%. Let me just say that the Monetary Policy Committee of the Bank of Ghana will hold the 83rd regular meeting from Wednesday, July 18th. So that's just a notice, and after that we will get to know whether this rate will be maintained, increased or decreased for that matter. That's what you see on your screens right there. Overall GDP growth rate of 6.8%, non-oil GDP growth rate of 5.4%, end period inflation rate of 8.9%. That is also what's been captured for targets for the 2018 fiscal year. And as we say, all the things being equal, these targets, some of them are expected to be reviewed to reflect the current state of affairs in the mid-year budget review, expected to be presented by the Finance Minister. Average inflation rate of 9.8%, fiscal deficit of 4.5% of GDP, primary balance surplus of 1.6% of GDP. That's gross foreign assets to cover at least 3.5 months of imports of goods and services. So these are the targets, the fiscal targets captured in the budget. But I've been joined in studio by Adu Owusu-Sarkodie. He's a lecturer at the Economics Department at the University of Ghana, Legon. Thank you so much, Mr. Sarkodie, for your time. Good evening to you.
My pleasure.
It's grateful that you have it as always. Now, aside what you saw in terms of the targets in the budget, the Vice President is talking about government budget deficit being capped at 5% of GDP from 2019 as part of measures aimed at preventing fiscal slippages. Yeah. From what you see, I mean, we can only do a trend analysis and postulate. Is it possible?
From the look of things, I think that we can do it. We can do even better than that. You remember that it was very high, around 12% by the end of 2012, and it fell to about 10% by end of 2016. And if you are doing about 5%, which is 4.5%, which is quite remarkable, I must say I'm quite impressed about the macroeconomic stability which has been achieved by this administration. The figures suggest that we need to do more in terms of domestic resource mobilization. But remember that we are still under the IMF program, and therefore the main pillar in the IMF external credit facility was fiscal consolidation. And fiscal consolidation will mean, bringing down budget deficits and then bringing down public debt. Of course, it is the accumulation of the budget deficit that make up the public debt. So when you are able to minimize your budget deficit, you'll be able to minimize the public debt. So the IMF program is, giving us something to think about. The budget deficit could also...
Do you think that it would, as it were, ensure that we become fiscally disciplined after the program? Because essentially, one of the major objectives of the program is to whip us into line in being fiscally disciplined.
Yeah.
After April next year, then what?
When we're in school, you go for break, you come late, your class teacher whips you. The thing is that we should be disciplined ourselves. I am not a fan of always going to IMF and then going to seek a bailout and for them to give us some conditionalities like removing subsidies from agricultural inputs, which we know will help the farmers and the poor, which are in that sector. Because when you remove the subsidy, then you deepen the poverty level. So I am not for these IMF programs, you have to go there when you face difficulties, but we have to
obviously.
be
Until
disciplined.
some will come in with a whip if only you are in discipline. That's what it is. I mean, and unfortunately, they don't come.
We go to them. So, they don't come to us. So we will have to be disciplined even after the program. But we've gone there before. Even in 1950, in the 1950s, we went there. In the 80s, we went there. Even President Kufuor's regime, we went there. Then President Mills. So we have been going there. So we go, we come back, we mess up, then we go back to them. They clean us up, we come, we mess up, then we go back to them. So I think that this should be the last time.
Hopefully. Winslow Sakifio is also joining us in studio. He is the head of capital markets at First Bank. Winslow, thank you for joining us this evening. We started with a discussion with the vice president indicating a deficit, that's the GDP from 2019 to 5%. As in terms of budget deficit. I was asking if this is possible from the trend analysis, maybe for the next past 2-3 years and the next 12 months ahead of us.
I think, as Sarkodie said, it's very possible. When you look at the fiscal discipline of this current government, it's very likely that will be maintained. But there's always a fear that if we get off the program, then the spendings, yes. So absolutely. I think it's something that we have to be cautious
even
of.
When we were in the program, we still are not able to meet some of the targets. Anyway, yes, so even though Uncle Sam still has a whip behind our backs, we still find a way of being in discipline. So really, I mean.
But if you look at it, if we weren't on the program, it would have been a lot worse. Yeah. Especially given the current economic conditions.
Be able to manage our own affairs. I mean, yes. Why is it the case? I mean, I'm just running up in 30 seconds on this.
When you take a look at the budget, the revenues that we have, domestic revenue and grants. For some time now, because Ghana is now matured, the developing partners have decided to divert their grants from Ghana to other poorer countries like Niger that may need it.
Right.
So last year we had 1.5 billion cedis grant. This year is about 0.5 billion cedis. That's about 587 million Ghana cedis. So once the grant is going down, there's every need for us to up our domestic resource mobilization. The average for the sub-region is 27%. Ghana is doing 20%. If we are able to up our game and include and get 7% more, now 7% of this year's GDP of 242 billion Ghana cedis will give Ghana 17 billion cedis. If we are able to raise 17 billion cedis domestically, I don't think we will even need to go to the capital market to borrow, the Eurobond market to borrow. We can mobilize these resources domestically, and we have to do it because nobody is going to do it for us. If we're able to do it, then we can keep our fiscal stance disciplined. There are two ways I was going to talk about. There are two ways of keeping the budget deficit. Either you bring your expenditure down or you raise your revenue. Of course, bringing your expenditure down is not the option because
and that's what we've been witnessing now.
Yeah. Right now, the capital expenditure has been cut.
Absolutely.
And I don't think that, because if you want to bring in on board one district, one factory, infrastructure development must be key. So you cannot cut your CAPEX when you want to industrialize. When you want to industrialize, you need the infrastructure. So bringing down expenditure is no option. We have to raise the revenue, get more money. Once you have money, you can do anything that you want to do with it. So we must be very disciplined. The revenue collection agencies, last week we talked about it. I think that it is important. We cannot introduce any more, taxes in the system.
So I was actually coming to that because I was having a chat with Professor Peter Korte, who is the head of the Economics Department of the University of Ghana. He is not too much in favor of introducing new taxes, but rather widening the tax net to get other sectors and other areas that are not actually being taxed, the other sectors of the economy that are not being taxed now to actually start being taxed. Now, that is something that we know we have to do.
Yeah.
Okay? Widening the tax net is a chorus I have heard for a very long time now. As to how we do it is also one thing.
Yeah.
Now you've seen government introduce certain measures because you can quantify something that you can measure. So now we are beginning to identify the people that we intend to tax with this whole Ghana Post GPS and other things. But if you analyze those interventions, how effective have they been in identifying those areas we can tax? Winslow, and I'll come to you.
I think when you look at the areas that are not being taxed, one of them is property rates, property taxes. And if we are able to just do one of them and do it well, we wouldn't be having this discussion again. But the political will still comes in. And as Dr. Quartey said, you can't deepen the tax net. You have to widen it. Otherwise, those already paying taxes are overburdened. And we need to spread the net. And that is something that I think we haven't been very creative in finding solutions to deal with it.
Why haven't we done that? If we know there's something we have to do. Okay, because why is the political will in not taxing or implementing the property tax law? What is the what political will is needed to do this? I honestly don't get this.
A number of those measures, we should strengthen already the existing measures. You take a look at the mining sector. There are so many mining companies that are in Ghana, and I am very sure that their contribution to government is not enough. I think that the mining sector should be able to contribute more than we are seeing. Those companies that are enjoying free tax at the free zones, we must review that act and make them pay. Or we can reduce the number of years, which is the free for them, like from 10 years to say 5 years. After 5 years, you begin to pay tax. We have talked about property tax. We have talked about the tax exemptions. So, and of course, the informal sector, we can always talk about it. There should be a whole plan, a whole design by government to actually embark on this exercise. We need it. We cannot, go and borrow and keep borrowing. We should, as a country, we should start running balanced budget or a surplus budget. We cannot and continue to be borrowing all the time. We need to be able to be self-reliant, self-sufficient, and mobilize these resources. So that's why last week I was very much confused about the fact that we politicize almost everything. After the elections, we must, NDC, MPP, we must all come together as one, put down these measures, let the Ghanaians know the need to, widen this net. Those who have been invading and avoiding the punitive measures must be stringent enough to deter them from doing that, and even to deter those who are planning to do that. So the laws and the governance measures must be strengthened. We need to prosecute people. If you go and take your car from the port and you don't pay, you run away, the law must deal with you. If you are supposed to pay this amount of money as tax, you don't do it, the law must deal with you.
See, because you talked about the property thing, because the Industrial and Commercial Workers Union is backing calls for the finance minister to reintroduce property taxes in the upcoming mid-year budget review. Beyond that, they are saying that, the macroeconomic figures look good, but in terms of the real economy, the pockets of the people, the lives of it's not reflecting. Let's take a listen to General Secretary of the ICU, Solomon Quartey, who spoke to my colleague, Daniel Opoku.
Law had been there for a long time, and strangely, it is the AMA or the Metropolitan Assemblies that have been managing it. And it is also skewed to some section of the society. Some sections of our societies are just not paying it. So spreading that tax net will also not be bad and could also rake in some revenue for government. Of course, every government needs revenue to be able to work. So those who are not paying at all. But if they come and want to review the rates that are currently being paid by the same few people that are in the tax bracket, that will not be just in the eyes of the law. And then we believe that this government will do the right thing by getting to those. It includes even parcels of land that has been acquired are also supposed to be taxed. So we believe that area should be able to give government a lot of revenue. On paper, the current government is scoring itself that they've put the inflation under check and control. They managed to bring base rates, all macroeconomic indicators. They are trumping and saying that they've gotten them in alignment. But nevertheless, those on the ground, and all of us who are within the economy, we could see that they've lost control on the fuel issue, and we are actually not feeling the kind of change that government is trying to bring to us.
Well, that's Solomon Kote. He's General Secretary of the Industrial and Commercial Workers Union. They say they are not. The macroeconomic figures look good. Okay, and one of the things we always do on this show is to look beyond the figures. The figures don't excite us. It doesn't really tickle us that much.
Look, I am an economist.
Is it reflective?
I am an economist, and I think I need to do this clarification. Who told you we cannot eat macroeconomic stability? We can eat macroeconomic stability. If there was no macroeconomic stability in this country as at now, things would have been far worse than we are seeing now. I'll give you an example. If inflation was around 60%, what it meant was that you need 60 cedis more to buy the same worth of items that you bought last year. But because of macroeconomic stability, you need few cedis to add to that. And who told you we cannot eat it? When the exchange rate is stabilized, I'm sure one of the issues that we will discuss today is about the exchange rate.
Absolutely.
And people are talking about it. It's affecting those who import items from China and the US and other countries. But if the cedi is stabilized, they will benefit. So macroeconomic stability, you can eat it. It is just indirect. It's because people think that it should be a direct cash transfer in their pockets. However, the point still remains that it is not enough. Beyond that, people are looking for employment. Beyond that, businesses are, businessmen are looking for much profit. Beyond that, the shopkeeper expects that when he opens the shop, many customers will come to buy. And I agree. But the point still remains that you need macroeconomic stability first before other things will follow. And the gains in macroeconomic stability can actually be felt in the pocket.
Wait, so on this,
I think I'll tend to agree with Sarkodie, but let me also add that the issue we're also having is with credit. Credit is very, very expensive now.
Absolutely.
I mean, interest rates, up to now, we are still seeing it hanging.
but let me ask you, I mean,
Yes.
you are in the financial or the banking space. The Bank of Ghana's objective of reducing the policy rate is to have you, commercial banks or people within the banking space, also respond, not in equal measure, but something, reflective of the objective of reducing the policy rate. That has not happened. You have reasons why you do that, saying that your risk levels are high, NPL rates are high. You have every reason not to do this. So
Yes. If you go back a little to 2012, 2013, that was when the correlation between the policy rate and prevailing interest rates on the market broke down. So now, Bank of Ghana will reduce the rate. It doesn't impact interest rates on the market. And it's because the banks who are carrying a lot of NPLs and they are not willing to drop the rate because of the fear that if the NPLs we saw in 2015, 2016 comes up again, it would collapse most banks. So for them, it's more of a risk measure now. And I think it's been long overdue. Interest rates are supposed to drop. I mean, the macroeconomic data is stable, and there's no reason why. But you have to bear with the banks too. They are facing a lot of risk. The market is still not very conducive.
I think
Winslow.
one material thing is the credibility. If the banks think that the figures thrown out are credible, if they also think that administration can stabilize the economy for a long time, we can sustain this stability for a long time, then they are likely to respond. But if you stabilize it for 2 years or even 6 months, and years after that, things get off hand, they are not likely to respond. So administrators or the administration must be able to earn their credibility from the businessmen and from the financial sector.
Great stuff. You're still live here on Business Focus. We'll be back shortly after this quick break. When we come back, we'll do a quick analysis of the current state of the cedi against major trading currencies. You hear from the Association of Ghana Industries together with my guest in here to stay. Welcome back to Business Focus here on TV3. We're live all across the world on TV3 Ghana, on Facebook, also on DSTV channel 279. It's probably brought to you by Star Life. That's Star Life, your solid partner for life, and also Vodafone. The future is ready. Yes, you will get into that as we go on. Now, Chief Executive Officer of the Association of Ghana Industries, AGI, Chuma Kwabwa, says the current depreciation of the cedi against major trading currencies, although a worry to industry, the AGI is more concerned about measures being taken by government to deal with the situation.
Occasional depreciation in the cedi is normal. It happens once in a while. And therefore the current depreciation indeed is maybe of concern, but we don't see it as an alarming. We think that it can be contained within the current financial arrangement. We just need to monitor things and make sure that it doesn't get out of hand. But occasional depreciation in the cedi, for me, is not too much of a worry. What is critical is that within the shortest possible time, it must be managed so that it doesn't overly depreciate.
So they are concerned about the measures being taken. Sakode, let me start off with you.
Depreciation is not that bad. Countries like Argentina and some other countries in Latin America, they intentionally devalue their currency.
Let's do the contextual analysis and situate it to what we have here. In this.
I'm saying that when your cedi, your local currency loses value, it is an opportunity for the local manufacturers to take advantage of that and to deepen exports, increase export, because when you export, when your cedi value goes down and you export, you earn more. So depreciation of the cedi benefits exporters.
Absolutely.
So it's not that bad at all. But the point is that we import more than we export. So on the net, we lose. So there's every reason for us to cap this, depreciation and contain it. There are long-term measures and short-term measures. The long-term measure, we all know, the structures of the economy could be, taken back to the Gadgetsberg's time, where we were even relying on gold proceeds. And currently, we are still relying on gold proceeds and oil and cocoa. So we don't seem to be manufacturing so much in the country. If you import simple items like tomatoes, onions, poultry, rice, sugar, these simple items that could be produced in the country, when the basis, the structure of your economy.
Tomatoes. You didn't have that one. You can grow behind your backyard. House, at your backyard, and we still.
These items, if you are importing these basic items, if your economy is an import-dependent economy, you should expect your local currency to depreciate anytime. We then need to, do this import substitution, export promotion. We have learned this in school. We need to practicalize it. I expect the industrialization policy of this country, of this government, to take off so that in the long term, we can put our cedi in a good position. But in the short term, as the president said, it has happened. So what do we do now, today and tomorrow? I believe that we can use the proceeds from oil. The benchmark price in the budget was around $65 per barrel. Currently, it's around $73 per barrel. We have made some gains. I even expect that to be mentioned in the mid-year budget. So we can use the gains in the oil to shore up the cedi for now. It's one of the strategies that we can quickly undertake to shore up the cedi, and also other things. I'm sure my friend from the financial sector can add the other measures to that.
Winslow, let me bring you in here at this point, and let's do an analysis of the interventions so far up until this point, and what we need to do in the short term and medium term.
I think for the medium term, he mentioned some of the long-term measures we can take. I think some can work in the medium term. But for the short term, the problem with the depreciation is if you are not too careful, it will get out of hand.
True.
And we are seeing around 5.8 on the market and around 2.56 interbank. If care is not taken, speculators step in, and before you realize, we are looking at double digits. So far, Bank of Ghana has tried not to intervene
as a result of speculation. I'm saying that this is not as a result of speculation.
No, the speculators haven't even come in.
Absolutely. Yes. And so I thought it was just ridiculous for somebody to even think that what we're experiencing now is because of speculation.
Well, I've heard that some of the telecommunication industries have sold their bonds.
Yes, and so now
And
you're
they are
having a lot more of
repatriating
the
the
CD-denominated bonds. A lot of people now converting into dollars.
In addition to that, I believe that one of the short-term measures, short to medium-term measures that can be done was to enforce the retention law. That law, which
So that when you
they will retain-
multinational
retain-
companies retain
exactly
a percentage of their profits
percentage of their profits
and not
in the
repatriate.
country.
I
We
see.
can make it the 20%, 15 to 20%, 30%, whichever way we can negotiate up to. That law must be enforced right now.
But
So,
you
I'm
know
sorry.
that currently we have foreign investors who can invest into our markets. And when they repatriate their funds, we still have the CD going down. So that we can't stop it. But what we need to do is to try and put some stability in the CD. And I think Bank of Ghana, so far, they have restrained themselves not to intervene so much. And
Absolutely.
where we are now, I think they might have to come into, calm the market a bit.
Yeah.
Because if the market is not calm, businesses will start hoarding their dollars, and then before you realize, the depreciation has gone
we have
over.
built-
So then the indication of, let me say with the indication of releasing a lot more dollars into the system. That's what we've seen over the period.
Yes.
How potent is that to deal with the situation we're having now?
I think releasing more dollars is short term. You can't do it forever. So at a point, if you don't have much reserves to back it, you would lose a battle very quickly. So what I think can be done is, let's use the other measures. As you talked about the retention law, the laws are there, but we are not implementing them. So maybe we should look at implementing some of our financial laws just to keep the CD stable.
See. So now, before we round up, I want us to look at the CD against the major trading currencies. How's it looking now to dollar?
To dollar, interbank is 2.56% to the dollar. The other currencies, I think the CD is not doing too bad. With the pound, is less than 1%. When you look at the euro too, it's about 0.58%. It's the dollar that we are currently having an issue with. I think with the others, so far, they are not doing too bad.
Finally, Mr. Kode, before we go, what is the way forward we need to? Because there's a lot of worry out there.
Yes, I think we should, embark on this domestic resource mobilization. We have talked about it, and also restructure the base of our economy. We cannot continue to be importing almost every item. The One District, One Factory project must take off. The industrialization program must take off. Ghanaians need to buy in. The private sector must invest. Infrastructure must take off. And when we do all these things, I think that in the long term, our city will be safe.
Thank you so much. Idowu Sarkodie, he is an economist and also a lecturer at the University of Ghana Economics Department. And Winslow Sakifio is staying with me to get into the commodities and the stock market. We'll be back shortly after this quick break. Still live here on Business Focus. Do stay. This is the investor page, and it's one of the innovations you're going to be seeing right here on Business Focus to inform you and give you the necessary tips as an investor and the decisions you need to take or what needs to inform your decisions in making an investment. And Winslow Sakifio is still here with me. He is the head of capital markets at First Bank. Winslow, we ended earlier with the CD and what has to be done. The concern is also with the commodities market now. gold is appreciating in value, right? So
Yes.
how's it looking on the commodities market?
It's true that gold is appreciating because there's a bit of demand for gold. And it's because commodities prices have started picking up. You know, currently there's the threat of a trade war between the US and their major trading partners. And most investors are moving away from the other currencies and investing in gold per se. So it's pushing the price of gold up. When you take crude, which is always a problem for Ghana, we are seeing crude prices going down. Currently, we are 77.67. And it's because we had Saudi Arabia increasing production. And then we also have the other OPEC members also increasing their production. So we are seeing crude prices. We expect it to gradually go down until we see something around the $70 mark. For cocoa, the story is not so good. Prices are falling because we expect Cote d'Ivoire to increase their cocoa production because of the current rainy season coming up.
No, but from what you talked about with crude oil, it's good news if governments respond to such decreases on the world market. But we don't see that reflecting in Ghana. So obviously we cannot be excited about any glut in supply for that.
What we should remember is the petroleum sector has been deregulated and government cannot come in as and when it wants. Otherwise, then we are going back to regulation. So, in as much as low prices are good, it takes time before it reflects on our market. And because government is not directly involved in regulating the price, we can have situations where crude prices are falling, but we'll still have very high fuel prices in Ghana.
You know, it's interesting you talked about cocoa. Today, the Ghana Cocoa Board went on some kind of domestic consumption drive, so that then, you know, we're all looking at exporting cocoa, but then the consumption domestically, something that really we haven't concentrated on in the mix of the analysis. What do you think should be done to increase the value of cocoa with respect to domestic consumption, finally, before we go?
For cocoa, the focus has been on exporting. And for most of the years, we've not added value to our cocoa. Ghanaian chocolates are one of the best in the world, but we don't take advantage of that. What we produce here is very, very small. And I think what Cocoa Board is doing would help. But I don't think that will make much of an impact unless government gets involved to drive the cocoa sector, especially for value addition. So we have more companies producing cocoa-related products rather than exporting the raw cocoa to the international
Finally,
market.
let's go on to the stocks market and see what stocks gained and others that lost.
Okay, I think for the past 8 weeks, we've seen the market going down virtually every week. And from last week and this week, we are seeing things picking up a bit. And it's starting from the financial stocks. I mean, they took a beating for the past 8 weeks. And currently, we are seeing the market reversing. There's also some interest in manufacturing stocks. So we are seeing manufacturing stocks also picking up. But going forward, it will be the banks who will drive the market, especially given the fact that there are a lot of weaknesses in the banking sector. But I think investors are looking up to the banks to bring the gains in.
Fantastic. Mwenso, thank you so much for making the time to be with us. Mwenso Sakifio is the head of capital markets at First Bank. Every other Monday, joining us here on Business Focus. Now, away from that, prices of key commodities have increased in local markets. If you're watching me, you can testify to that when you go onto some of the major markets across the country, you would witness this. Isoko, an information and communication service provider for agricultural markets in Africa, is explaining that prices are expected to remain high for the next 1 month at least.
Market price data and analysis for the month of June indicated a rise in commodity market prices. Key commodities have continued to make gains. The highest gain of 14% was made by yam, Puna, rising to 692 Ghana cedis. Maize experienced an increase of 7.26% to close the month at 166 Ghana cedis per bag. Local rice also made a gain of 4.38% to close at 347 Ghana cedis, with cowpea gaining 3.63% to close at 379 Ghana cedis. Groundnut, millet, wheat and imported rice all saw an increase in price. Tomato, however, experienced a significant reduction of 28%. The general trend of price increases for most commodities is expected to continue in August. Traders say the trend has been higher than anticipated for this year.
Both the old and the new yam are expensive.
Last month, one alone can
5. And this
month,
7 cedis.
1 tuber of new yam, how much is it?
It's 15 cedis. This year is different.
This year has been different. Prices have gone too high.
Content manager at Isoko explains that the price increase is a seasonal occurrence. He assures Ghanaians of a reduction in prices in the market in August during the harvest season.
Around this period, you see almost all the cereals moving up. This is because the stock that we had in the previous season are virtually used up, and so demand and supply comes in, and then prices usually moves up around this period.
The Commodity Price Index tracks the prices of key agricultural commodities across the country.
If you're buying a tuber of new yam for 15 cedis, attribution is that it's as a result of seasonal factors. We'll keep an eye on these developments on the local market just so that you get informed. With Isoko as well, helping us with those figures in detail. But we want to say thank you so much for spending time with us here on Business Focus. Proudly brought to you by StarLife, your solid partner for life, and Vodafone. Future is exciting. Ready. On behalf of the rest of the team, thank you so much. My name is Alfred Okanse. Have a good evening.